The force surrounds us and penetrates us. It binds the galaxy together. You must unlearn what you have learned. Every aspect of your life is impacted by taxes, whether you know it or not. This podcast will educate you and also uneducate you. The latest clickbait tax trend. Is it accurate? This is a podcast for regular people. It may be hosted by a CPA and certified financial planner, but it's not for us. Instead, this is a chance to tell you a story about how I use tax law, yes, tax law, to save a couple's marriage, or the time financial planning prevented the estrangement of a father and his daughter. I'm Cecily Welch. As the accountant you can understand, I help people navigate and understand the one thing that impacts every financial aspect of your life, taxes. This is the Tax Translator Podcast. Welcome to the Tax Translator Podcast, where taxes speak human. I'm Cecily Welch, the accountant you can understand, and I am aware that if you have any inclination of financial independence, financial wellness, as a CPA and certified financial planner, if you're ignoring taxes, you're doing it at your peril. So I help navigate the one thing that impacts every part of our financial lives, taxes. Today's podcast, we're going to go a bit into a deep dive. No guest this time. I am going to try to translate into English some of these tax planning strategies. More frequently than not, a lot of tax planning actually is what is not on your tax return versus what is. Let's cover the normal disclaimer first. I am not your CPA. I am not a replacement for your CPA. This is educational. Please use this information to better understand what you're doing and why taxes matter. So many times we're told to do something or execute something or fill out something for benefits and we don't know why. This is why I'm here. I'm going to go into the deep dive. As a matter of fact, a few months ago, I had an employee who was figuring out what benefits they were going to select, why or why not. And they asked me, said, look, I know that the HR people can't say it, but I know that this is supposed to save me in taxes, but I don't get it. Show me how. What is this besides this big black hole? So that's why I'm here. And again, the disclaimer, educational, not specific tax advice, you understand. So let's get into a few numbers. I'm going to just cover a few of the alphabet soup of tax planning. There will be other deep dives as well, but purposely, let's not get overwhelmed because each of these have different rules that they have to follow. So I just want you to be able to see and understand when someone is telling you that this is a tax planning opportunity. Sometimes it doesn't actually show up on your return at all, not what you're looking at, but it has saved you money. What do I mean by that? Let's get into it. Okay, I'm going to cover a couple of numbers. I tried to use round numbers, but really when you see it in a pragmatic way and see tactically what's going on, I'm hoping it'll help and it will absorb why these acronyms are saving you if they are the right acronym for your fact pattern. Okay, so let's talk through an example of a couple of these tax acronyms, what they mean and why they actually save you some money. Let's see. Regular person, regular life. I'm working, I'm earning, I'm spending money. I got a house, I got a mortgage, I've got children, I've got medical costs, normal life stuff. So we're going to assume for this example, my medical costs include prescriptions of $1,000 and I've got some co-pays of $3,000. So my total medical, $4,000, just normal everyday life I'm living. Got a child or children, got to pay for daycare, got to pay for summer camp so I can work and earn enough money to keep a roof over everybody's head, right? So daycare for the year, $14,000, and no, that's not an exaggeration. That's where a lot of daycare costs are nowadays. And summer camp, we're also going to do some things after. So paying for some summer camp too, so $2,000. So dependent care costs for the year, $16,000, right? Living my life, got this going on. Now, why does this matter? Let's take a look. Let's look at some actual numbers. We're now going to take a look specifically at what the tax return looks like. I'm not worried about this alphabet soup yet. The alphabet soup doesn't exist. What does my tax return look like? And when you saw the prior podcast, I'm using the exact same numbers here so that you don't have to refamiliarize yourself with the numbers. So I've got salary making $205,241. I've got some interest. I'm taking a retirement plan distribution of $20,000. I've got a K-1 coming in, which is the document that shows how much you have made from your pass-through business or your investment into someone else's small business. They're not publicly traded yet. So I get a K-1. I have itemized deductions of $33,000. So including salary, interest, retirement plan distribution, my K-1, and my itemized or standard deduction, my taxable income is $345,241. And all of my CPAs out there and really, really detailed technical people, I am not attempting to get these numbers exactly right. I am trying to show mathematically why the alphabet soup of tax planning helps you. So please don't send me a note, but this is what isn't the standard deduction right now. I don't, not relevant right now. Too many other factors. But point being, regular person, live my life. I guess it's debatable if a regular person is making that much. But point being, taxable income, $345,241, and my tax rate is a flat 25%. Simplification, flat 25%, which means that my total income tax, $86,310.25. I've had withholding of $13,000. So the taxes due at filing, my technical people, I am not including interest or penalties because they're underpaid. My taxes due at filing, $73,310.25. Got it? Right. I have not taken into account any of my alphabet soup that we're going to talk about. And I have paid my regular medical costs, my copay and my prescriptions, and I've paid my daycare and summer camp cost as normal. This is what my return looks like. Yay? Yay. Okay. Now, let's talk about some of this alphabet soup stuff that people keep telling me it's supposed to save me in taxes. I don't really understand what the heck you're talking about, right? Okay. FSA, flexible spending account. That has to do with medical stuff. DCA, dependent care account. Daycare, et cetera, et cetera. I'm using the example of children, but your parent might be your dependent. You might have to, you might be sending them out during the day so that you can work, or you're bringing someone in, et cetera. You might have some dependent care costs. It doesn't have to be a child. I'm just using a child because that's the one that we all kind of understand intuitively. So what happens if I utilize this alphabet soup of tax planning tools? How does this help me? I need to understand. You're not helping me here. People keep saying it helps me. Here are the numbers. Let me show you how it helps you. So that when the benefits person says, I can't give you tax advice, but these are tax advantage tools that you can sign up for. And when your CPA looks at your return at the end of the year and goes, hey, did you consider doing yada, yada? And most of these tax advantaged tools, you have to elect once a year. You can't just do them whenever. Okay, so now we are now utilizing the FSA, flexible spending account, and DCA, dependent care account benefits. We've signed up for all of them. So, hey, wait a minute. Take a look here. Hold on. Whoa. My salary is lower. My salary is $20,000 less because I had $20,000 of medical and $20,000 of dependent care stuff. Hey, that's not a bad deal. And if we keep going down through the regular calculations, my interest stays the same, $3,000. My retirement plan distribution stays the same, $20,000. My K1 coming in from the business that I'm invested in or my business that I'm running, $150,000. Standard deduction or itemized, $33,000. So I subtract that. My taxable income is now $325,241. And my tax rate is 25%. My income tax is now only $81,310.25. I have my same withholding. My taxes due at filing are $68,310.25. I've saved $5,000 in taxes by utilizing this alphabet soup of tools. And notice, I've saved $5,000 in taxes, but it's not like my return shows me that. It's that numbers never came into this salary number. Numbers didn't fall into that box one or fall into the top line. This is what I mean when I say that there's some tax planning that happens that never shows up on the return, but you're still actually saving. So now, that's not a bad deal, I suppose. That's not a bad deal. However, let me get the annotations right. Delete all my drawings. There we go. Oh gosh, I'm on this podcast. You all are hearing me singing. That's scary. That's real scary. So, as I mentioned, this is a $5,000 tax savings that doesn't show up on your return. Now, do not stop here. Do not go, oh, this is wonderful. This is what I'm going to sign up for. Hold on, stop. Nope. Conceptual. I want you to see the savings so that you can conceptually understand why you might want to consider this. But stop. All right, let's hit the next calculation that it is important for me to show. Go. Click the button. There we go. Limits. There is no way that you can get a tax advantage for 100% of your medical costs, 100% of your dependent care costs. Not going to happen. But I wanted to show it in total so you can see where the savings is. Flexible spending accounts, for example, in 2026, the limit was $3,400. 2025, $3,300. 2024, $3,200. Same with dependent care account. It's a significant jump for 2026, $7,500. For 2025, it was $5,000, and for 2024, it was $5,000. So, I want to be clear and specific. I am oversimplifying this concept. Even in describing the limits, this is still not enough for you to make the decision to elect in and know how much of a benefit you're going to get. There are many different limitations, calculations. Some are income-based. Some are how much did you actually spend. Some of these are dependent on what your employer does. Some are refundable. Some are, well, these aren't credits, so they're not refundable. And you need to make these elections at the time you're signing up for benefits. You can't figure out in August, oh, I'm going to have way more medical expenses than I thought. Okay, I want to sign up for the flexible spending account. Nope, doesn't work like that. So part of planning and doing things in a tax preferred manner. Notice I didn't say tax deferred, tax preferred. Anything that's tax preferred, there are gonna be limits. There are gonna be rules. I think you all remember from multiple podcasts that I've done. Tax law started off really simple. Everything's taxable. And then exceptions have been written into the code. Well, if you do it this way and do it properly. Oh, if you do it this way and do it properly. So, flexible spending account, FSA, dependent care account, DCA, are two of the tax preferred planning tools that are out there that you can have. They may be offered by your employer, but you need to understand what those rules are. And you need to understand what that acronym is to make sure you're talking apples to apples. When it comes to the alphabet soup of tax planning, it is critical to talk about what it is you're trying to do and make sure you are using acronyms correctly, and make sure you are talking to your CPA and hearing your CPA about the proper acronyms. Why do I say that? Because I'm just covering two right now, the FSA and DCA. Notice DCA is dependent care account, which is different than the child tax credit, which is also different than the dependent care credit, which is not the dependent care account. I have a nice long list here of other ones that we're going to cover. There's a FSA, HSA, DCA, IRA, Roth IRA, 401k. There are multiple different tools, and every administration does then have different economic goals and plans and policy, and they're creating different ones as well. So actually, this alphabet soup of tax planning, we could probably do perpetually one every couple of months to cover the different ones. Okay, but point being, because they are so similar, and frankly, us CPAs are at fault for this, we frequently speak too quickly and also make the assumption that you know what we're referring to. So this is actually exactly why the Tax Translator podcast exists, to help us in this communication and help reduce the friction between taxpayers and their respective professional, because we aren't always speaking apples to apples, and also to connect with you of why you should care. Frankly, I've even had clients who we go through this calculation and they happen to be at a income level where the amount of tax savings isn't significant enough for them. And what do I mean by that? Anything that's tax preferred, you've got to jump through some hoops. Of course you do. Duh, right? Even though you are setting your own money aside for your flexible spending account or for your dependent care account, let me make sure I clearly explain that. The reason there is a deduction, let me go back. Go back here. Here we go. Annotation, delete, clear all drawings. The reason this amount of your salary is lower is because you're putting your own money aside in an account that you get to use. This set aside is on a pre-tax basis, which therefore reduces your W-2. That's why. So you're getting your own money back. And no, nobody takes your word for it. So yes, you have to apply and follow whatever rules your employer or outsourced vendor has to get your own money back. Yes, you have to supply receipts or the invoice from the daycare. And yes, they need to know the child's birth date to make sure they fall under all those rules as well. So I have certainly had clients who took the opinion of, I'm not jumping through all these hoops to get my own money. Works for them. But you should be making those decisions with informed knowledge. How much is it going to save you? Understand what your particular employer's process is for accessing your own money, and if that makes sense for how your financial personality is. Make sense? Whew. Okay. So I think that we've made it clear why these create some sort of tax savings for you, and hopefully it's understandable enough where you don't have to go, well, someone said I need to do it, let me check the box or not. Totally dependent on you, on your fact pattern, and make sure you understand how the limits, the multiple different limits, impact you. I'm not going into that. I'm going to once again give my disclaimer. I am not your CPA, but you now at least understand, oh, this is how it's supposed to save me taxes. Now, does this work in my fact pattern? That's what you work with your CPA and your financial professional with. Whew. I know, I made you guys go deep into the numbers. Sorry, we got to do that sometimes. Take a sip. This is coffee, by the way. Okay, so thank you for listening to the Tax Translator podcast. You can find me on the normal social media links, LinkedIn, Instagram, Facebook, Cecily Welch CPA. And also, for those of you who really are intentional about how do I improve the relationship I have with my CPA, how do I get what I'm paying for? I know I can get more value, and somehow whatever's working isn't working. We're not being clear, concise, and compliant. They're talking in circles. I'm trying to talk in a straight line. Go ahead and go to theaccountantyoucanunderstand.com. There's a webinar, free webinar about how to work best with your CPA. Absolutely, we could do a much better job of speaking English. I would love for this podcast to not be necessary, but years of experience have shown me that people don't get how important taxes are and that they impact every aspect of your life, and they do. So here's the why. That's why we're doing the podcast. Also, that's a whole different podcast about us and figuring out how to talk to people in a way that they understand why this stuff matters. But hopefully you can see why this stuff matters. So again, thank you for listening to the Tax Translator podcast, and I will see you on the next episode. Thank you.